What is going on, everybody? Q here from Hyperstocks. Thank you so much for joining. In this video, we're going to go over a company called Altria, which is MO on the stock market. We're going to talk about the short-term trend and we're going to talk about the long-term trend. We're also going to talk about their financials and numbers and if this company is a good company to hold in the long term and what benefits and cons we see from the company's financials. So if you're a short-term trader, we're going to start off with you because this is going to be the easiest way to explain the company's short-term. We're going to utilize candlestick charts and talk about what's happened recently with the company. So if you're not familiar, the company did fall recently after an announcement from the FDA that they would be banning Juul cigarettes. These are electric vaping cigarettes that came into light about a decade ago, I would say, and now they're finally getting banned off shelves. This doesn't mean that all e-cigarettes are going to be banned, just Juuls so far from the FDA. And the reason why they're banning them is not something we're going to get into. We're just going to be talking about the company and how it affected Altria in specific. So Altria is not necessarily the producer of Juul. They do own a 35% of Juul, a stake of 35%, that is, which is about $12.5 billion. They bought them in 2018, and they have made them about $2 to $3 billion a year on average. So not a massive amount, but that's still a significant amount. That's about 5 to 10% of Altria's yearly revenue, which is something to consider, but it's not the most back-breaking news that the company could get. Juul is sold in 5 different countries. One of them, and the biggest one, is the United States, which is something to account for. Now, looking at the short-term stocks or the short-term trend before we get into the long-term potential in the financials, we can see that Altria has suffered a very deep decline. The last decline that it suffered that was this severe was actually back in the COVID-19 pandemic crash. It came down to $31, but it's been on its road to recovery since. But when we're looking at this company in general over the last 15 years, we see that they're not really a company that has shown tremendous upside. They have sort of broken out, came back, but not really have had too much upside move. They did make it all the way to around $80 back in 2017, 2018, but ever since then they kind of fell off, and this was at a point in which they were considered a little bit overvalued. So this right here, when the company was right here, was trading around a 50 times price to earnings ratio. A nice price to earnings ratio is anywhere between 15 to 25. So right now the company is trading at a 25 price to earnings ratio. If you're a short-term trader and you're looking at the stock for opportunity, you can trade it either up or down. So the upside, you would want the stock to break above 44. So going into the next week, you want to look at the hourly candles. So this is going to be your main focus. You want to look at this specific line right here, which is the 100-day moving average, currently trading right above 44. If the stock can successfully break above that point, then it can potentially move its way to 46 to 48. Now, when you look at 48, we can see that there is a resistance also here, which is the 200-day moving average. So right above the 100-day moving average, the stock can push to the 200-day moving average. And above that point, it can push to 48. That would be your first upside price target if you're looking to play the stock. If it does break above 48, then we can potentially see it moving to 50 to 52 over the next few weeks. Now, to the downside, going into next week, the stock would need to break below 42.20 in order to sell off towards 39 to 40. So anywhere above 41.20 or 42.20 going into next week is considered back into a potential bullish reversal. So don't be fooled by the fact that the news is telling you that this company is hurting severely based on the fact that this recent ban on Juul cigarettes happened. It doesn't really necessarily mean that the company will just continue sliding off. You got to remember that the stock market, sometimes they will price in things before they happen, and you can see that Altria has been sliding off since the beginning of June. The news became official of the ban just 2 days ago or 3 days ago on this really large drop. So maybe, just maybe, they already knew that. Who are they? The people on Wall Street and investors who get information way ahead of us. They already knew that this was going to happen. So they began selling off the excess positions, and the company corrected itself back towards 41. Now, if you are a long-term holder or if you're looking to buy a position in the stock for the longer term, as long as the stock holds 41, you are good to hold. If the stock comes down to 41 and bounces, you're still good to hold. If it breaks 41, maybe things are getting a little sketchy and you should think about an exit plan. Because if we break 41, that means we broke the most recent lows, and below 41, the next support is going to be right below 40 at 38. So if we break 41, then we can come down to 40 and 38 and so on and so forth. Now, looking at the financials for this company, we can see that Altria is pretty much a steady company. This is a company that you want to be in for the dividend. If you are a dividend person and you want high dividends, Altria is going to be your friend. They have a 90-cent dividend, quarterly dividend that is, which is an 8.5% yield, and their income statement has been steady. You can see that over the last 12 months, for the last 3 years now, they have steadily gotten to 25 to 26 billion in revenue, which is fantastic. This is a company that has steadily shown revenue year over year. Unfortunately, their net income is not fantastic and it has jumped around quite a bit. But overall, they are steadily holding their revenue. Not all public companies need to make a ton of net income in order for them to be sustainable. As long as they have a lot of revenue, as long as they're able to pay their employees, and as long as they're able to produce their products, then they can be sustainable even if they don't make a ton of net income. The company's balance sheet, on the other hand, is a company that has not my favorite type of balance sheet, which would come on the con side of this company. So the pros are you have your large dividend, you have your steady revenue, but the balance sheet, you can see here, it becomes problematic a little bit because they have assets of 39.5 billion, but they have liabilities of 41 billion, which is actually a ratio of more liabilities than assets, which is not my favorite type of ratio. I like seeing companies with a lot more assets than liabilities. So if you are a buyer of this company and you want to hold long term, you want to make sure that their liabilities are starting to decrease in the next few years and starting to take over on asset side, because you don't want them to have too many liabilities where they can't pay back some of their debts, or they have to kind of close out some manufacturing plants in the worst case scenarios. And finally, we're looking at cash flow. The company has some cash flow at hand. I believe they have about $3 to $6 billion at hand of cash flow. Now, unfortunately, they did spend $12.5 billion on Juul back in 2018, so it wasn't the best use of their cash, but overall, they still have some cash flow at hand for them to survive. So, looking at the daily chart, it does look pretty ugly. The company did come down towards that 41. But if you're a short-term trader, there is upside opportunity. We can see the company move back towards 46 and potentially 48. If you are a long-term investor or a long-term trader, you want to use moving averages as your target. So say you want to take the company on for 2 to 3 months. You want to buy here, hold as long as it holds above 41. If it moves towards 48 to 50, then it's a perfect time to take profits if you don't plan to hold any longer. But if you're a dividend buyer and you're looking to hold the stock for much longer, then this company is fantastic, a fantastic dividend player, and they're likely going to be around for a while considering the industry that they're in.